Hello and welcome to the Trading Pit, personal investing tools and techniques for the active trader and investor. My name is Lundy Hill. I am a 35-year veteran of the commodities market, ex-pit trader in the Chicago Board of Trade bond pit, commodity trading advisor since 1991, as well as a retired commodity futures broker. Here are the charts that caught my attention this week. First of all, this is not investment advice. I am not a financial advisor, and you can lose money trading. These are the weekly reviews for the week ending May 30th, 2025. First, let's look at the dollar index. It's on everybody's mind. Last month, I highlighted this breakout down of the DXY, the Dixie, to new 3-year lows. This month, May of 2025, price tried to rally back up into the 2-year congestion zone, and that failed. May closed below April's close, and the candle formed an inverted hammer. This typically can point to a reversal of the trend coming into the bar. That would mean a price rally for the Dixie. Note that the doji star at the breakout up for January of this year, that indeed led to lower prices, much lower prices actually, and led into the congestion zone. Also note the spinning top in October of 2022. That was another top. However, what I don't like about the upside here and now is that April was the widest down month in over a year. And also the congestion of May took place below the congestion low highlighted with the red lines. So the pattern in May was below the congestion zone, meaning I think lower prices are in the works. I think a 94 handle could be had. If you look, that's the congestion high target, and that is also a congestion wave projection below the low of the congestion zone. And if you go down to a weekly chart, which I don't have here, it showed a 4-close reversal down last week, with prices unable to hold a rally this week. This makes me think again that lower prices are in the works for the dollar index. Now let's go to gold. Speaking of doji bars, here's the gold monthly bar chart. May closed out a doji bar in the monthly gold as well. It figures gold and dollar index working concurrently. You could think that this is a top in the gold market, as the doji bar usually signals an imminent reversal in price. And since gold has been up for all 4 prior months of this year, that might not be wrong. However, another way to look at it, another way to think about this, is that the doji star of this last month of May could be ending the sell-off down move from the highs of April. Note that the long upper wick of the April bar, extending all the way up to $3,500 and then selling off over $200. Maybe the doji bar of May ending this month is telling us that the reaction sell-off from that prior month's high is over, and that up moves are in the works. Note also a similar 2-bar pattern in May and June of 2024. The doji bar of February of 2024 pointed to a jumbo 10% price rally in gold in just 3 months. Either way, I find it hard to short gold, and I do believe, in my opinion, that prices are headed higher. Next, let's go to the stock indexes. I'm going to highlight the NASDAQ here. The top 3 stock indexes form similar patterns, the S&P 500, the NASDAQ, and the Dow. But I think the NASDAQ formed the strongest pattern of the 3. and the Dow Jones formed the weakest. Here is the NASDAQ monthly chart. After the dramatic sell-off in March, price continued down in the first part of April, only to reverse just as strongly and not only close up for the month, it reversed the prior month's low and the prior month's close. That is a strong buy signal, and a buy should have been entered above last month's high, which worked out very nicely as May carried forward to buy the dip. I am bullish on stocks now, mostly NASDAQ and S&P 500 names, the big tech names mainly. Of course, after a strong May, a sell in May saying, sell in May and go away, could happen for the summer months. If so, I could understand if the NASDAQ pulled back down towards the high of April before it rallied higher in August and September. Next, let's jump over to Bitcoin real quick on the 4-hour bar chart. Here we have a 4-hour bar chart, and 2 weeks ago, last week actually, today's Friday, so last week, Bitcoin reached all-time highs, and there wasn't much fanfare about it. At least I didn't find much. Hence, we sold off since. Will the sell-off continue? The short answer for me is I think yes. I've highlighted the first down move from those all-time highs. This is a 4-hour bar chart. I labeled it 1 and 2, and then I moved that same bar over to the next leg down after an intermediate rally. So we're forming an ABC pattern down, but note that the second move from 1 to 2 is extended. So the C leg goes farther in price and time than the A leg down. This means obviously more sellers coming in. And this means to me that we have lower prices also coming in. Prices have also penetrated the congestion zone of mid-May, and that is not shown here. This suggests prices could carry down to the bottom of this zone around the $102,000 per Bitcoin area. That said, I don't think the risk reward is there for a buy or a sell on Bitcoin. And finally, let's go back to cocoa. 2 weeks ago, I said that cocoa was in no man's land after a strong rally. And sure enough, prices pulled back, but they did pull back deeper than I expected. And prices dropped right back into the prior congestion zone around 9,500 with the top. And Friday in cocoa closed out a 99 percenter. This was one of my father's patterns that he discovered. It is a complete change in sentiment. Notice Thursday had a gap down, wide range down, and a low close. And then Friday had a gap up, strong up move, an even stronger up move, and a high close. It is a complete change of sentiment. It more likely is called a 2-bar flip-flop. I think cocoa might have some backing and filling to do immediately, back down to the 9,500 level immediately. But after that, I expect prices to test the 10,750 area, which is the low of the high bar. I hope this helps. Thanks for watching. Please like and subscribe, and let me know if you find this content helpful.